For our COBT listeners and viewers, it's Maynard, Deborah, Robbie, and Mike here with two special guests. We've got Jeremy Fraenkel and Brennan Demro. They're from Fundamental AI. It's a fascinating company. It's Tuesday. We've spent the day with them here in Houston talking to a number of energy clients of all shapes and sizes about how they can use Fundamental AI's technology. The reason we have so many of us here today in terms of co-hosts is because we're going to have a really robust conversation and try not to do what all of us end up doing, which is kind of arm waving about the potential of AI. We're going to get into the specifics and the nitty gritty, and I think it's going to be fascinating. Let me just stop here and say, Jeremy and Brennan, we're so glad to have you guys here with us today.
Thank you for having us.
Well, and in full disclosure, Mike, as we turn to you for the market update, we are investors in Fundamental AI, but we're big believers, and we see something cool, we want to share it. So how about that?
Well, I would add to that and say very happy investors. So yeah, I thought, today what I'd share is that, we're halfway through the year. So, instead of going through a lot of stuff, let's just, give a sort of a year-to-date, review and sort of, not only in performance, but just some of the bigger stories this year. So just starting from a mid-year review standpoint, bond market, 10-year treasury yields began the year at roughly 4.15%, plunged to 3.95% in late February, peaked at 4.65% in mid-May, and now traded around 440. So up about 25 basis points this year so far. Broader markets, S&P 500, quarter to date, the S&P 500 is up 15%. That's the best quarterly gain since Q2 of 2020. Year to date, it's up around 10%, with the best performing sectors being energy, industrial, and tech, all up about 19%. The worst performing sectors are consumer discretionary, financials, and telecoms, and they're down about 1% to 2%. As far as the oil markets and WTI specifically, we began the year at $57 per barrel, peaked at roughly $115 a barrel in early April. That was up 100%, and today it trades around $70 a barrel, so up 22% for the year. Gulf Coast refining cracks. Now, this goes to what President Trump was talking about. Why are oil and gas prices not down a lot? Refining cracks started the year at $17 a barrel. Gulf Coast refining cracks, they're $55 a barrel. They have barely come down. They're up 215% this year. Regular unleaded gasoline started the year at $2.85 a gallon, peaked at $4.55 a gallon, and trades at $3.85 a gallon today, so up 35%. U.S. natural gas is trading around $3.30 an M. That's down 10% for the year, while European natural gas is at roughly $15 an M, which is up 50% year to date. As far as the energy sector, it's up 19% year to date. From best to worst, the refiners are up 60%. Oil services and large cap midstream are up around 30%. E&Ps and alternative energy are up around 25%. U.S. majors are up around 11%, and EU majors are up around 7 to 8%. As far as electric utilities, they're up 8% on the year, with fuel cell companies. This is a big one. Two of them, Fuel Cell Energy and also basically Bloom Energy. On average, they're up 325% this year. IPPs are down 10%, and SMR companies are down about 25%. Somewhat related to, these large-scale generation companies like CAT, Generac, GE Vernova, so those type names, are up around 70% year to date. And the distributed generation companies, guys like Solaris Energy and Liberty Energy, they're up about 65%. So that's kind of the performance mid-year. I'd say if we want to look at some of the biggest stories in all those markets, I'd say bonds. I think the biggest story is the trader mindset went from the Fed is going to cut rates in 2026 to now the Fed is going to raise rates in 2026. Huge. Oil market shifted from a modest oversupply mindset at the beginning of the year, pre-Iran war, really shifted to this undersupply. Oil inventories worldwide being drained. And now we're back in the camp of the market's going to be massively in a glut into 2027. So that's what we're dealing with. The other big stories I'd say were Maduro basically getting captured in Venezuela. And I said the other story would be the UAE exiting OPEC. As far as energy, the Devon Coterra Energy merger. And also I'd say BP, the reshuffling of their CEO as well as their chairmanship. I'd say from an electric utility standpoint, it would be NextEra Energy buying Dominion Energy. That was huge. And AES going private was also a big deal as well. As far as broader markets, I think obviously the biggest story, and we talked about it for 4 or 5 weeks, was the SpaceX IPO. They raised 75 billion at a 1.8 trillion valuation. That was huge. And I think the other big story, and it was really all year long, was just the Mag 7, the significant capex spending for AI. That was the big story of the year as well. As you know, to sort of wrap it up, I think investor preference this year, it shifted from the AI data center companies, the Mag 7 companies, and sentiment, investor sentiment really shifted towards a distributed generation company, guys that actually provide the equipment and the power to basically supply these data centers. Those are the ones like the Quantas of the world, the CATs, the GE Vernovas, Generacs. They did very well. And semiconductor companies, that group was up 100% this year, while the Mag 7 were down 5%, but Microsoft, Oracle, Meta on average were down about 20%. So that's kind of a review of this year. It'll be interesting to see how things play out in the second half of 2026.
That's awesome. Oh, that's a great rundown. Thank you. Well, Jeremy and Brennan, we're delighted to have you guys. I think we've gotten to know you over, I'd say, roughly the last 4 or 5 months. We've been really struck by it because one of the things, Jeremy, I might ask you to just talk a little bit about the company as we jump in. But the first time I heard about it, Robbie was reporting back, this is an AI company that is not focused on words and video and all the stuff that we all manipulate with our phones. These guys are focused on data, tabular data, structured data. And of course, the energy power industry has so much of that. So let me just get out of the way and ask you to kick us off by talking a little bit about the company and what it does, what the technology is.
Yeah, thank you. So when people think about AI, people often think about ChatGPT or Claude, and for good reason, right? Like what those LLMs have empowered us to do is really amazing. We can use them to generate videos, to write code, to write emails. But what's less appreciated is that the vast majority of enterprise data actually doesn't live in unstructured data. It lives in structured form, in tables. So spreadsheets, databases, CRMs, ERPs. And that part of the enterprise never really had a ChatGPT moment. And that's really what we're working on enabling. Essentially, we built a foundation model called Nexus that we pre-trained on billions of tables to really understand how the world works in rows and columns, and to enable companies to make much better predictions and decisions on their data.
I thought it was interesting. One of our, as we've been meeting with people and talking about all this, somebody had a reasonable question, which is, I wonder why the world started with words and unstructured data as opposed to this data, which, on the face of it, arguably has so much more value. Like, why did we develop in kind of the way we developed?
So I would say the pre-LLM based era, the old traditional machine learning era, was really based on structured data. But in that world, you didn't have a lot of transfer learning across data sets. What you had is algorithms that were built to handle one data set at a time. And then when ChatGPT came out, it really enabled people to start working with all of that unstructured data. And those models were really built on understanding the next token, the next word in your sentence. But and the data available to train those models is widely available on the internet. You can find as much data as you want on Wikipedia to train your LLMs. But for tabular data, that's a very different story, because the valuable data set actually sit behind closed doors. They sit with all those big enterprises. And so it wasn't as easily available for people to even build models that could handle those type of data sets. And as a result of that, in parallel, you also need a very different architecture to handle that data. There has been less focus on it. But I would say over the past year or several months, enterprises have now been able to test all the LLMs and have seen that while the LLMs can be helpful at many things, they struggle when it comes to tabular data. And that's why we've seen a lot of interest from enterprises in the energy space as well as in other industries, where people are like, hey, I have a lot of tabular data and I want to be able to make better predictions and decisions, because those are the those are the decisions that impact companies' revenue, companies' ROI. And that's something that, now that, people have played with the LLMs and have realized their shortcomings, that's when people or enterprises became more interested in learning about this and testing those models out.
And you might just tell everybody a little bit about the background on embarking on this mission. You were an investment banker, so it shows that there's hope for investment bankers to do other things. And then you were at Bridgewater, and then you've had some other tech companies. But maybe just talk about how you saw the need, and then how you pursued it.
Yeah. So when I was at my previous company, I was working with a bunch of tabular data. My previous company was an AI company focused on financial services, and there was a lot of tabular data at that company. And what I realized when ChatGPT came out is that while those models were powerful, they were not addressing the problems I was dealing with. And so I started asking myself, like, am I the only person who cares about it, or is there maybe a better solution out there? And when I started looking, I saw there was nothing available out there to really handle the type of data problems that I was dealing with. And so I started talking to leaders of different enterprises, and one after the other was telling me, like, oh yeah, this is one of the biggest problems we're facing. And so I realized there was a real need from a commercial perspective. And then I partnered with our chief science officer, Marta, who spent almost a decade at DeepMind working on meta learning, which is the basis of every tabular model out there. And she told me there was a very big underinvestment from all those AI companies in that space. And so I realized there was a very interesting intellectual challenge from a research perspective to handle it. And I saw the opportunity from a commercial angle. And so that's when we decided to start a company. Now, the question at the beginning was like, is it even possible to build that? And now, like 2 years in, we realized, yes, it is possible to build this, and we're making a great stride with lots of enterprises.
The other thing, and maybe this is just me, but Brennan, I'm looking over at you here too, but when you talk about structured data, to me, it conjures up like literally it's rigid, it's set, it's uniform, it's clean. But that's not really the case. It just has a certain form, and it might be incomplete, or it might be. So if you wouldn't mind, I just think talking about, because your average company has all kinds of structured data, and it's in various forms all over the company. To me, it's like structured in a weird way. It misleads the type of data that you're talking about.
Yeah, with structure, we really mean like, think about all your spreadsheets, all your databases, or like every time every sensor data, every transaction log, like all of it is what we refer to as tabular or structured data. And a lot of that data, as you said, has incompleteness, right? Like you have missing values. You have...
I think in Jurassic Park, in that missing piece of the DNA, no, I'm joking, but go ahead, sorry.
No, but you end up with like different types of data types, right? Like you have like dates, you have numbers, you have text in your structural data, and that's very different in language. Right? Like when you read a paragraph in a newspaper, you don't suddenly have like a missing word or like suddenly like something out of context, but that happens with structured data. And so that's why there is such a big effort for data scientists currently to start with raw data, clean the data, pre-process the data, build a bunch of new features on the data. All of it in order, and all of that is probably, 80% of the data scientist's time. And all of that effort is before even starting to run any algorithms on top of it. And that's really what we're changing by essentially enabling companies to run their models on their raw data directly.
Do you think in a weird way that all the effort around machine learning with structured data and all that focus and cleaning up all that data and trying to glean, answers from it in a way that almost slowed down the development of what you did, because the world kind of sort of found an imperfect way to pull predictions out of discrete data sets. And that's the way we do it now before what you've done. But now we have found a better way to do it. So you have to kind of replace an existing way, whereas there was no way to do that with language.
So I actually would disagree. I think that with language, you could do the same thing in a more primitive way. If, for example, 10 years ago, I asked you, hey, can you tell me what's the sentiment on that news article? You could hire a data engineer and a data scientist and spend a lot of effort in terms of creating a sentiment analysis task on this piece of text. Now, the advantage with ChatGPT or Claude is that you can do it much faster and much more accurately. And I think that step change is really the same thing that we're seeing in our world as well. Like you can do a lot of data scientists can do a lot of things, but if you want to really get that step change in terms of the ability to transfer learnings from data sets and being able to do to work directly on the raw data as opposed to being a data scientist where you end up bringing some biases to your to the raw data when you're analyzing it using traditional algorithms. That's a step change that we're now enabling that didn't exist before.
Okay, here's my idea. Brennan, I want to pull you in here because you're the chief commercial officer of the company. So you're seeing not just within energy, but across all kinds of industries, how this gets used and how people are thinking about it. But then, Deborah, you have seen how often companies are trying to bring in technology to improve their operations. And Robbie, you're watching all the tech we're involved in. And I still remember you coming back from these guys' offices, just electric, how excited you were. So you guys are next. But Brennan, tell us about the experience of getting into a company, explaining what this does, getting them comfortable, and then hearing about their problems. I think people would love that.
Yeah, I think as Jeremy said, there's this big challenge for structured data. So I think the first thing we hear is okay, this makes sense. There's ubiquitous levels of data out there and everybody faces the same problem in terms of understanding what their data means. So there's no kind of hidden mirrors in terms of okay, yes, we understand this is a problem. We face a traditional enterprise challenges, which is they're long, the cycles are challenging. We're also educating the market a little bit. I think we have some tailwinds with the AI space with large language models, but we also have a little bit of a double-edged sword where we have to sort of explain, hey, what's the difference between a large language model and why would I do this versus maybe some of the techniques I'm using today for data science. So there's a little bit of education, but I think we're generally seeing a really insatiable demand for especially enterprise companies, as Jeremy set the stage on. These large language models are great, but they fall short of understanding structured data. Well, most of the critical decisions that are happening in these large enterprises are coming out of tables and rows and structured data. So I think we're seeing this really interesting demand, and companies are moving relative for the enterprise space. We're actually seeing, companies move straight from proof of concept into, commercialization, I think much faster than traditional enterprises have moved before. I think a lot of that has to do with the fact that folks are waking up in these enterprise companies and saying, hey, especially from the board down, we need to get an enterprise AI strategy. And to date, we've seen a lot of consumer AI, velocity and momentum and trillion-dollar companies being built like ChatGPT and Claude. But I think this is a new age and a new transformative approach to making sense of structured data, leveraging a purpose-built tabular foundation model.
Deborah, would you talk about this? Because you, Brennan, this proof of concept. So, any company they have a whole bunch of things they're focused on. They usually have 2 or 3 things that, boy, if we could really figure that out, that would be, particularly helpful. You've seen companies, Deborah, try to crack the code on all kinds of things, implement all kinds of things. What I was listening to today that sounded so cool is it's pretty easy with this technology to try it, to say, hey, that's a problem. But talk about proof of concept and how you perceive it working with fundamental AI.
So I think there are a couple of things, and I think this will come out in our discussion here. And Robbie and I spent a lot of time with some of the companies in your network with our AI roundtables. And so we know what the challenges are with sort of AI adoption writ large and the current LLM technology, which is reliability, it hallucinates, it's built on a certain architecture. It could be different whether you're using Claude or ChatGPT. I personally use Gemini Pro, and you're going to get different results, and the same question could give you a different answer. Well, that's not an enterprise environment. So if we're working at an oil and gas company and we're dealing with, valves that are turning and machinery that's moving, you want to make sure that you're going to get the same answer with this on the same fact. So there are a lot of proof of concepts going on using this current, an amazing technology, which Jeremy talked about, but it's having trouble scaling because either it's not observable, like how did you get that answer? Why did you get that answer? And 60 to 70% of the time it's correct, but there's 40 to 30% it's not. And so that's not something you're going to get comfortable to take to upper management and the board and say, hey, yeah, let's now push this through the whole organization. The big difference, and why I think Robbie was excited and I was excited when he asked me to take a look at it, is this deterministic angle. And it is a foundation model. So it acts like an LLM, but it's acting on a data set that's pre-trained, if I understand it right, that has a world model, but it's tabular data, which means it's fixed, it's determinable, you're going to get the same answer. And then you can use your enterprise data. Yep. And it gets access to, the thinking that Nexus does. And that gives you a more reliable and a result that you can trace.
Yeah.
Now you get over this, gee, should I really do this? This POC was great. I was able to do it pretty quickly. I brought in these guys, but I'm not sure I'm going to get the same reliable result. So I think that's a little bit of a long-winded answer.
I think there's one other piece to it too, which is security.
Yes.
So security is priority zero at every major enterprise company. And Amazon, Amazon, that was something that Jeff preached from the beginning of the company, is security absolutely has to be priority zero, because data leakage, data faultage, servers going down, that destroys businesses. And the resounding response we're getting to our model, I think a lot of it has to do with the fact that we've built a security provision model that we can actually deploy into the end customer firewall. So you have to remember, a lot of these enterprise companies that have tried the ChatGPTs or the Claudes, the experience is I have to give that data across the web. Right? That's like a CFO, CTO, CIO. That's a nightmare. And so now we're coming with a new solution, which is a disruptive approach to leveraging and harnessing this corpus of data, which is structured, which is where the decisions are made, intersecting that with a priority of security by deploying the model into their customer VPC, into their end firewall. This is a very new approach that I think allows for a little more palatable kind of risk, if you will, to take on doing a proof of concept and moving from proof of concept into production.
I probably didn't directly answer your question. It's also faster because most people that are listening to this that have gone through an enterprise adoption of any kind of big new system, software, AI, data is the key foundation. So you need to cleanse the data, and you may have a system, your ERP system, it may be in great shape, or CRM system, that data is there. But it's going to be different at every company. It's going to be structured differently. It's used differently. It needs to be cleansed. There's outside data that's got to be brought in. You really can't have an effective AI implementation of any aspect without that clean data. And I think, Jeremy, your model also addresses that data science element. You're able to take that in. So to answer your question directly, it also makes that process much faster.
Well, and then that's what listening to you guys talk about this, that's what sounds, because I think it's instinctive when you hear a new solution to say, oh, well, maybe I could try it.
Yeah.
And if it works, then I'm in.
Yeah.
But when the cost of trying it is massive and risky and complicated and delayed, then you're not going to take that approach. But I kept sitting there thinking, as I've listened to you guys describe this to energy clients, that you could try this.
Yeah, I think there's an element of computational power that's like really important with our solution. That's very different than a large language model. So like the number one thing you hear on every single web page today is tokens are out of control, right? The spend is out of control. Uber's budget for the entire year was blown out by March for AI tools. And the reason that is because there's really no firm governance around these tokens. And so our model is far less computational power to do inference on, right? So like we're not tokenizing this solution. It's a more value-based solution where, the cost relative to the value, I think, is much more measurable and governed appropriately relative to something like a large language model.
This comment Deborah made, Jeremy, about deterministic, would you mind explaining that and compare it to an LLM? I think it's an interesting point.
So determinism means that if you ask the same question twice, you get the same answer. And a simple example here is like, imagine you have a credit card and you swipe your credit card to buy a coffee. Any of the credit card companies will make an instant prediction of whether the transaction is fraudulent or not. Now, if you swipe your credit card twice, you want to make sure that all else equal, the same prediction is being determined in both cases. Now, that's not the case with LLMs. With LLMs, if you ask ChatGPT or Claude a question and slightly change the order of the words in your sentence, you can get a different output. And that's fine when you're writing an email because you want every email to be different. Or when you asking it to summarize a body of text. But when you're making a critical decision on whether a transaction is fraudulent, or what ads to recommend, or or question about load forecasting, you want to make sure that those predictions are the same every single time. And that's the difference between a deterministic model versus a non-deterministic model.
And I was just thinking, as you were describing that, is some of the conversation we've had with you, it seems like people default back to, so therefore we have to have people prompt in exactly the appropriate way. So you put the engineering back on, the prompt has got to be, but to your point, it's not about making sure the question is structured in exactly the right way.
Correct.
It's having the right algorithm.
Correct. It's having the right architecture to handle that type of data. And another simple example here is like, imagine if you have you're a healthcare company, and you have a list of 1 million patients, and you try and predict which one of those patients have a certain disease. And your first column has the weight of the patients, and the second column has the heart rate of the patients. Switching the order of those columns, and different hospitals will have the data in different order, in your particular order. That change of columns should not impact that prediction. And that has nothing to do with the prompt you put in. It has everything to do with as you said, the architecture on the type of data you work with.
That's a good example because I'm someone who wouldn't want my weight to be my heart rate. That would be bad. Robbie, you've been on the fundamental AI trail for a while. And also you've been running these, Deborah mentioned it, our AI roundtables and such, but maybe talk a little bit about the journey of getting to know those
absolutely. Thanks, Maynard. Yeah, one of the things we love to look at, especially with our AI roundtable, are teams, companies, ideas that are really differentiated, that are providing a lot of value in the space. And I think that's something we saw with Brennan and Jeremy and the fundamental team, is we kept hearing about, LLMs and them getting adopted within companies and companies building out this full tech stack. But nobody was really talking about the structured data piece. And so when we first heard about it, I was like, okay, this is really interesting. Let's go. Let me go check out this company. And that's what I saw. I saw a team of like young engineers. You guys are passionate about this. You guys are solving this hard problem, working around the clock, right? And then we took the idea to some of our partner companies, and they were all like, whoa, this is really interesting. Nobody's thinking about data science. And oftentimes these companies pride themselves in being data-driven decision makers, but the amount of data, the volume of data, the amount of decisions they have to make, it's all being bottlenecked by data science teams. And you guys are unlocking that, which I thought was like super fascinating. And then going out even farther, companies in our space are talking about agentic agents. And everybody's trying to do this agentic work with LLMs, but you're going to need more tools than an LLM. It's great for language. I love the analogy of like the left brain, right brain thinkers. You guys are providing that like right brain to provide this holistic knowledge center for a lot of companies. I don't know that if you want to opine on that a little bit, Jeremy, on what you guys are seeing with agentic workflows and companies.
Yeah, and I think that left brain, right brain structure is, it's a framework I like to explain. The left brain is, the side of the brain that's good at understanding text, reasoning, summarization, and the right side of the brain is the part that's good at understanding statistics, pattern recognition, maths, and we focus as a society within AI on that left side, but not on that right side. And that right side is actually the difficult part, because that's the part that humans are bad at, and I would be able to say enterprises as well are really bad at it. But being able, and people often talk about, are we going to get to AGI, artificial general intelligence? And I don't like that concept for a variety of reasons that I can get into. But if we do believe that they will have some sort of super intelligent form, we do need both sides. And we need the left side and the right side to handle your text as well as your tabular data. And that essentially, and what we do is we enable companies to really work in an agentic way by using their LLMs for whatever unstructured data types they have, and leveraging our model to make better predictions on the decisions that are critical for those businesses.
I was wondering, Brennan, you've talked, I think you've got some examples of this on your website, but every company is modeling something and trying to forecast the future around, it could be demand, it could be weather patterns, it could be usage patterns, there's all kinds of stuff. When you go into an enterprise and they show you those models, is it competitive? Is like, what's that dynamic, and how do you help them improve the models, or do you replace the models, or how many angles that your customers end up having around all this?
Yeah, there's a few permutations. I think it depends. I mean, we've definitely seen, when we go into large organizations, there's a tendency sometimes of the data science team, especially, saying, hey, we've built a model, we have our own recipes, they work great, like, who are you guys, right? So I think it's really important that we take a very thoughtful approach to working in conjunction with the data science teams. And a lot of the things we're doing are on the model side. But where this becomes really valuable, and I think a force multiplier, is when you incorporate the subject matter expertise. So we do not have the subject matter expertise a lot of these folks in-house have, of some of the historical information and things that happen in the business that are really, really important to incorporate with the model. So like the 1 + 1 = 3 equation is really important. But no doubt, as we go talk to large enterprises, we've tended to see the sweet spot being large corporations that have major decisions to be made, structured data, when incorporated into predictions and forecasting, and incorporation of, like, say, a basis point improvement or two has outsized returns. Shipping, oil and gas, media, entertainment, these are all industries that spend a lot of money in course correcting these kinds of predictions, can add a lot of value. Now, there's always going to be an element of change management, transformation, disruption. So we have to kind of delicately navigate through that. And I think we've learned a lot of lessons in the 4 months we've been out talking to customers, that the more we can work closely with the data science folks and have the kind of alignment with the executive team, because of course, at the end of the day, the leadership team has to buy into this transformation. It's a big change, it's disruptive, and it takes a leadership level buy-in to say, yes, we're going to do something like this.
But to the point earlier about how your architecture works, people don't have to switch horses.
Yeah.
Right. They can incorporate you, and they can see what their existing models are telling them, and what your service is telling.
Yeah, I think that's right. I think very quickly that the guard goes down, especially in the data science teams. Once they get their hands, it's effectively running the same process a data science individual would use today, except for you're incorporating generative approach. And that's really the transformation here, is the same thing that led to this outsized value with language and text and video, was generating net new content. And all we're really saying is, hey, instead of a data scientist spending hundreds of hours cobbling this information together and writing thousands of lines of code, truncate that down, incorporate a foundation model, and generate these predictions. And I think there's always going to be laggards and drivers in industries. And I think the drivers on the data science side are the folks that are going to gravitate towards this technology and say, hey, I want to embrace this. This is going to make me supercharged, and I'm going to be a lot more valuable to my company.
I was thinking, Deborah, you've referenced a number of times that we've talked about all this, about two aspects of this. One is, it doesn't just give you an answer. It gives you the logic that goes with the answer. It says, this is why the model is predicting. And that's not only useful for understanding, but it's useful for documenting why you think what you think, why you decided what you thought. And then there's a corporate governance and overall discipline in the organization aspect to this, that's another really unique feature. Do you mind talking about that?
Yeah, I mean, I think that it leaves an audit trail. You can create an audit trail. You talked about LLMs. This is not a competition between the LLM and the tabular model. There's features of the LLM that are very powerful. So all the things that you mentioned that your model can do to unlock, the drudgery of data science, the LLMs are doing for the drudgery of us having to manage our calendars, having to read, thousands of pages of contracts and summarize them, and they may be similar across, 100 contracts. So there's a lot of value to that. The issue is the governance around that and the reliability of that. So one of the things that's very exciting and kind of leading edge is to look at fundamental and Nexus as part of that governing model. So you hear a lot of, and I don't understand all of this, but you hear a lot of engineering like, oh, we can create this harness, and put boundaries around it and do all the software engineering to corral the agent and the LLM so it doesn't kind of go off the, go out of bounds. Well, that's pretty hard. I mean, now you're just doing a lot more work and burning up a lot of compute to do that versus this can be combined. This is the left brain, right brain. And it becomes a governor, and it's a governor that can be audited through other software techniques that already exist.
Jeremy, you look like you had something you were going to add to all that.
No, I was going to say to the question you asked Brennan, for us, like to your point about like, companies don't have to replace what they currently have in-house, is like, it's exactly that. Like, we want companies to try a model and benchmark it against what they have. And we have such confidence in our own model that we want the model to speak for itself in a way. And for people to really try it, see the results, compare to what they have in-house. And of course, if the results are worse, then no need to continue the conversation. But in all likelihood, when the results are better, people are then more interested, and that's the first step they need to take in order to see what we are able to offer.
You referenced this in the history, the brief history you were giving, which is, and you've already done quite a lot of training. You've fed the model lots of tabular data already. Do you mind talking about how you did that, how you got that data? Do you need more data? Like, just talk about that process.
Yeah, so I would separate like the training data and the data we and customers' data. And what I mean by that is, in order to get the training data we had to train our model, the data we got to train our model, we tried to find every source we could to get the data, whether it's acquiring data, whether it's partnering with companies to get data, whether it is finding data on the open source, whether it's augmenting that data. And we've essentially gathered data, like we've gathered billions of tables in order to train that model. And to your point about like, do we want more data? Of course, like the more data, the better, and we're continuing to improve our models. But that's very separate from customers' data. And to Brennan's point, we deploy our models within a customer's own environment. And so we forget about even training on data. We don't even see a customer's data. And we care about that. And that's the most important thing for us, because we know that trust is at the core of everything. And if customers can't trust us with our models, there is no way they're going to use us. And so we never train on we don't even have the capability to train on a customer's data.
Brennan, do you mind just giving a quick, because I mentioned you're chief commercial officer, you're seeing all these applications and industries, but the energy industry in particular, what are some of the use cases or some of the things that are getting people excited? First application.
Yeah, I think, first of all, I think there's a massive interest in the energy industry for a few reasons. One, tremendous troves of structured data. So these organizations are sitting on 20, 30, 40, 50 years plus of a lot of rich data, but that data is unrefined, using a pun for the energy space. Like, it needs to be refined, and there needs to be insights that are pulled out of it. So number one is there's just this really rich history of structured data across the energy business. Number two is, there's a lot happening geopolitically, Hermes, all these situations. So right now it's a good time, but like that pendulum can swing back. And we've seen that through, the different administrations where it can and it will. And I think, generally speaking, what we've observed is that the boards, the executive offices of these large enterprise organizations in the Fortune 50s are very cognizant that they have this information. They need to leverage AI, and they need to transform their business in the future, because what is pumping today and delivering a lot of wealth and value might be a very different story down the road. And so embracing and harnessing the power of AI, I think is going to be critically important. So that's the first thing. The second thing is, there's a lot of use cases and almost a ubiquitous number of things that you can apply this technology towards. But there's use cases we're seeing that have commonalities like predictive maintenance. Obviously these assets are very expensive that are sitting in the field. And so if you have the ability to take the telemetry data off of these assets and understand before they break what's going to happen, why is it going to happen, and then fixing those assets before they go into failure is vitally important, both in terms of the asset itself as well as the production yield. So predictive maintenance is a really big one. In terms of energy demand, just sheer prediction of energy demand, looking at things in the market, assets like natural gas and supply and demand are really important for these organizations to understand the flow. And so, there's a lot of things that go into consumption of energy. It's not just weather. It's also commodities trading. It's, things that are happening in sentiment for consumer shopping patterns. It's things like historical, wind and turbines. And so all of these data sets are really, really important to kind of inputs to output out what the forward-looking demand is going to look like. So we're seeing a lot of different use cases, but generally speaking, I think there's some common themes. I would say what's really interesting is we've noticed this back office appetite. So there's a lot of financial use cases that I think we're going to start to unearth. And one large super major we're talking to is having us look at the operating expenditure costs of supplying assets into the field. And the way the organization is doing this today is over provisioning, right? So the last thing you want to do is under provision to have all of these resources available in the fields. So as a result of lack of these kinds of technologies, they're simply just over provisioning everything. The CFO estimated that that's like tens of millions of dollars easily that could be pruned. And the way they can use our model to do this is actually relatively simple. It's just plugging in SAP HANA data, looking at all this information in terms of the operating expenditure costs, and getting a much more surgical. So I think, we're going to see the front end usage and application of the technology, but I think we're really excited too about the application on the back office application of this technology too.
Okay, this is, I'm going to spiral out of control here. Because we all know, like, everybody's excited about AI. You can't find anyone who's not excited. Well, there are people concerned about it, but in terms of what it might do for companies, massive excitement, lots of people trying. How, if you're a CEO, CFO, CTO, anyone in the chain, how do you sort through all the companies that seem to have solutions or say they have solutions or are approaching these things? Like, you're kind of, I'm assuming they're getting bombarded with these things. So, I just throw it open to everybody. How do you,
the first thing I would say
is, how do you do it?
I think you put on your investor hat, right? If you're an investor in a company, the first thing you're looking for is what's the moat. And I think a lot of these companies, as you start to peel the onion back of like, what's the actual moat of the business, it gets a little weak, right? And that moat could be, we're not using our own model, we're using OpenAI or Claude or something like this under the hood. And on top of that, there's this wrapper business. So I think, first of all, if I'm in an executive position and I'm looking to ascertain like which of these AI tools do I want to invest in, I almost put my investor hat on and say, okay, which of these companies have a moat? Because the most important thing is which of them are going to be durable and sustainable. If I invest a major part of my capital expenditure into AI and there's not a long-term sustainable business that I'm investing to, that's a big problem. So I think the thing we feel really good about is we have this moat, and our moat is our own model. We built this model from the ground up. It's ours. We've purposely built it out of tabular information. So I think, that's how I would describe kind of sifting through the pieces here is what of these companies have a durable moat.
I have to say, everyone knows we've got a bit of, I don't know how you would describe it, hysteria or just agita about all these models. We've got, is it closed model? Is it open source model? The Chinese models, and all of these, what you just said, what Brennan just said is so critical. A lot of these solutions, so facilities management, working capital management, inventory management, things that you described, where you're over provisioning, that's working capital that you've tied up in inventory in multiple places because you want to make sure it's all available. There are a lot of solutions out there. Some of them, and SAP has their own solution, but a lot of them are built on these LLM models. So they have all the faults we talked about, hallucinations, reliability, having different, potentially a different outcome. And so there's a lot of software engineering on top of that, which you're like, okay, does that kind of defeat the purpose? And then the durability of that, if the rug's going to get pulled out or if the cost of that is just too much, and I'd just rather have, Bob and Jane continue to, look at it on paper and get reports out to me. So I think that is something that the Nexus model can really clean up and take off the table. So that's a really different message than I have an engine that's better and I'll help you manage your inventory working capital.
Yep. Robbie, do you have a perspective on that? You
Yeah,
talked to all these.
Yeah, I think the other thing that I find really interesting is the go-to-market approach, right? Like having cool tech is great. Our industry sees a lot of cool tech, but being thoughtful on how do you take that tech and develop value for the customers? And I feel like the approach with the applied AI engineers, I don't know, Jeremy, if you want to speak to, how you guys develop that model and the success you guys are having around the applied AI approach.
Yeah, and to main answer your question also, what I focus on is ROI or whatever KPI you care about as a business, and look at whether the AI solution solves that problem or not. And that's the main thing that I would look at, right? Because at the end of the day, AI is great, but AI is a tool. It's a tool like any other tool. You just need to know when to leverage it and for what use cases. And to your point, what we realize with companies is that yes, we have that model. The model is powerful. But there are of course some complex use cases where where a company wants to customize something, so optimize certain specific things. And that's where we bring our applied AI team to work directly with customers and with subject matter experts to optimize whatever they care about to get the highest performance and to squeeze the most juice out of the system to get as high of an ROI for that company as possible.
The other thing, switching gears a little bit, that's interesting for us. So we've made over the last 4+ years a number of investments. You are a startup company that is very well capitalized, right? So you're built for competing in a big world. I just wonder if you talked a little bit about the talent you brought to the company, maybe add to that, but also add how you thought about capitalizing the company and what was necessary to accomplish your goals.
Yeah. So I think that, a lot of companies go out and try and raise as much money as possible. And I don't think that that's the right approach from a startup's perspective. I think you should actually raise the least amount necessary. And what I mean by that is if you don't have a use for the capital, don't go and raise the money. However, if you're a company like ours, where building a model costs a lot of money, retaining the talent we have, with people from Google, DeepMind, and other big labs, costs a lot of money.
How many people do you have now, Jeremy?
We're close to 70 people, and probably we're going to be north of 100 by the end of the year. And so for the talent as well as for the compute and even the data, right? Like the data, if we want to go out and buy more data, the data is expensive. You need a lot of capital. And that's why we've raised so far close to $300 million to go and achieve that vision.
And do you have a stat or anything about your people, like this many PhDs or this many XYZ? What is there any? Because I know these people; these are pretty specialized, super smart people.
In our research team, the bare minimum is a PhD. People
there's an expression you don't hear very often. The bare minimum is a PhD.
Make the cutoff, Robbie.
The fun thing is that for our research team, someone who comes out of a PhD is considered too junior. So we want people who have a PhD plus a few years of experience. And of course, that talent is more expensive than the average talent you would get at a normal company.
And where is everybody? I know you obviously have a headquarters, but how do you approach that?
We have an office in San Francisco, and we have an office in Europe. And the idea here is that we want to leverage, there is talent in both places, and we want to leverage the talent in both geographies to try and get. Because for us, the main thing is trying to get the best talent, and whether that talent is in Europe or whether that talent is in America, we want to make sure that we have the best talent to build the best models out there.
And Brennan, can I ask you just a generic question? How would the hyperscalers, I know that's so generic, but how would they view you? Like, are
Yeah.
you
Yeah, so first of all, I came from Amazon, and I think we forged a really amazing partnership with Fundamental before I transitioned out of my role at Amazon, and it was a very exciting opportunity all the way that was recognized all the way up through the leadership chain of Amazon because hyperscalers don't view AI startups as consumption model in terms of the compute they use necessarily. They view it more strategically in terms of the downstream compute. So if you look at the relationship that Amazon created early on with Anthropic, which Microsoft had OpenAI, Amazon had Anthropic. Those relationships were really galvanized by the consumption that was happening downstream, right? So they made their commitments on compute to the respective hyperscaler, but then the enterprise companies or the consumers, for the most part, at that point, were consuming massive amounts of these, of these tokens, which led to a lot of GPU consumption. So hyperscalers are really, I think, generally speaking, this is the unlock for enterprise. And we've got a really terrific relationship with Amazon that we're really proud of, and Amazon's really excited about us. We're excited about them because we can go to market together and unlock that. Most importantly, unlock a lot of value for customers, and I think through that value unlock, open up a lot of incremental revenue in terms of these AI workloads and GPU consumption.
You guys can work with other clouds, though.
Correct. Yeah, we do not have an exclusive relationship with Amazon, but we have a really awesome relationship with those folks.
So Deborah, you've been around this a lot. What have we not touched on that we should have here?
Well, I think the other thing that strikes me is this is not an end product. This is an exciting leading edge version 1 that's solving an incredibly important enterprise issue. And we are at an inflection point of AI revolution is taking off. How does that look at the enterprise level? And is fundamental becoming part of a central part of everyone building their intelligence layer.
Mm-hmm.
It becomes an ecosystem where fundamental can drive that engine with the control, security around it. And then now you can safely bring in all these other powerful tools, whether they are physics models that are very specialized for an industry. So that's your PhD in a box that understands, seismic geology or what engineering well design. And then an interface. So this is sort of where I think we're evolving.
Yeah.
And then you have to address the compute cost.
Yeah.
And it just doesn't feel realistic. I'm probably totally wrong on this. It doesn't feel realistic that we're going to spend $5 trillion building more data centers and we're just going to be happy that compute costs are increasingly go up.
Yeah.
That's got to get solved. And those can be solved with probably some good engineering, some good physics, as well as a different way to attack it. So when you've got that much money on the table, that's a lot of savings to go get. So I think what's exciting is this is a solution and this is what you use. This is the beginning of the journey to an ultimate solution, whether we end up with every company having their own AI, so this idea of sovereign AI, or it just becomes an open source, brain engine that people can tap into. And I think it's something that everyone ought to be thinking very carefully about. Maybe this is a way to look at it.
So Jeremy, are we going to see a scramble of new competitors to try to do what you're doing, kind of like we saw in LLMs? Like, how do you see this playing
I'm
out?
sure that over time you'll have more and more as people get as people start understanding the space more and more, you'll have more and more competitors. And we do welcome competition. I think competition is a good thing. It means that there's more and more interest into that space. And I definitely expect not just a lot of the big companies, but also a lot of new startups over the coming months and years to form and to try and tackle the same problems we are facing.
Well, I tell you that, Robbie,
one of the areas we're really interested in, I think a lot of value can get unlocked, is at the edge. So we've been an investment in Armada, which we're really excited about, with their full edge AI stack compute at the edge. But thinking about a lot of the tabular structured data, especially in energy, is being produced out in the field, right? So thinking about how do you get this data, how do you then start processing in the field? I think it's going to unlock a lot of value, a lot of new capabilities, which we're really excited about when we're thinking about investments we make and strategically where they fit in the value chain within energy.
Well, the value of making a complicated decision really quickly,
Oh yeah.
that adds a lot of value. That's clear.
And it's not language being
important.
produced. It's
Yeah.
it's numbers. I mean,
Yeah.
that's why what's so exciting about this data.
Well, I should have done this on the front end. The reason, the real reason for the show today was not because we have an investment, but it's just because I think, honestly, as we replay the last year or two or so of all this AI conversation and all these approaches and issues and opportunities, this is just the most unique thing that's come up by multiples. Like I really, and so
Mhm.
that's why. And then also, you know, I think we've done it. I'm going to declare success, but I think hopefully the listeners and viewers will feel this way too. I think we got into this at a level that people can understand. You know, we're not just saying AI is great. Like there's real meat to all this. So, guys, we really appreciate it.
Yeah, appreciate the partnership with Veriton team, and it's been an incredible couple of months, and we're really excited about continuing to, you know, grow the partnership. You guys have been terrific, so thank you for hosting us.
Couldn't have said better.
Well, there is one fun thing that has come out in all this very serious value add conversation is that, Jeremy, you have a World Cup prediction
Correct.
model and you're leading your
Correct.
friends.
Correct.
But what would you tell us about what happens from here or anything you might want to tell us?
You know, I'm originally from Belgium, so I'm rooting for Belgium, even though our model is not predicting Belgium to be the winner. No, so we created a website, and everyone should go and look at it for themselves, called soccer.fundamental.tech. And essentially, what we do is we use historical international games to predict the winner of the World Cup and predict the winner of every game at the World Cup. And the first thing we did is we wanted to see how well does our model perform against the betting markets. And so we trained our model up until the 2022 World Cup and tried to predict how well our model would have done on the 2022 World Cup, so the previous World Cup. And betting markets were saying that Brazil was going to win the World Cup up until the quarterfinals when they got disqualified. And our model at the group stages was already able to predict that Argentina was going to win the World Cup. And so when we saw the results of that, you know, previous of the model on the previous World Cup, we decided to implement it on this World Cup. And I believe that as of today, the model is also predicting that Argentina is going to win, despite, you know, betting markets saying that France is the favorite to win the World Cup.
Interesting. Okay, there it is.
Heard it here
Argentina,
first.
France.
Argentina.
You know,
You're first.
that's good.
Yeah, exactly.
Well, guys, thank you so much. And
Thank
to
you.
everyone, we hope you have a wonderful 4th of July. The other thing we don't do very often is no tie. You know, Bradley cleared me to not wear a tie since it's a holiday week. Have a great one. Thank you, and we'll talk to you soon.